When we talk about Donald Trump, there's always something making headlines, and his tax story is no exception. Beyond politics, his relationship with the IRS is full of drama worth exploring. What really happened? Let's find out. Let's start with a famous IRS audit that has everyone talking. Back in 2008, Trump declared that his Chicago hotel and tower were essentially worthless for tax purposes, which allowed him to report a significant loss. But here's the kicker. Just 2 years later, he transferred the property between his own companies, raising eyebrows at the IRS. They started questioning whether these filings and transactions were truly legitimate. If the IRS is right, Trump could end up owing over $100 million in taxes. For most people, this would be a devastating blow. But for Trump, it just seems like it's just another day at the office. And that's not the end of it. After years of legal battles, 6 years of Trump's tax returns were made public in 2022. These documents revealed his financial empire, his income, his deduction, and his strategies for reducing his tax liability. For some, this showed a savvy businessman playing by the rules. For others, it was a clear evidence of how the wealthy exploit the system to pay less taxes. Either way, it is fascinating to see how far tax laws can be stretched when you know how to work them. But wait, there's more. In December 2022, the Trump Organization was found guilty of tax fraud in New York. This wasn't really just about deductions, it also included perks for top executives like luxury apartments, fancy cars, and even private school tuition. None of these items were reported as income to the people receiving it and were reported as deductions for the organization, avoiding taxes altogether. The results? Fines and even more scrutiny for Trump and his organization. Now, let's be real. For most of us, this level of financial drama is hard to imagine. But there are some important lessons here. First, deductions and tax strategies are fine as long as they're backed by solid evidence and follow the law. Second, ignoring issues like audits or IRS notices only make things worse. And third, transparency is always critical. Once the IRS starts investigating, you don't want your financial situation to fall apart. And let's not forget, Trump is proposing tax changes like eliminating personal income taxes or increasing child tax credits. These ideas are sparking debate about how they'll impact the economy, and of course, how they might benefit people like Trump himself. We know that as a president, Trump is in a unique position that could shield him from facing the same consequences as the average person. But for the rest of us, whether you're a business owner, an employee, or just an everyday taxpayer, the IRS enforces the law to its fullest extent. Ignoring the IRS, it is really never a good idea. If you're dealing with your own tax problems, maybe not as big as Trump, but just as stressful, don't let them spiral out of control. Click on the link below to schedule a consultation. We'll help you navigate your tax situation and keep your financial story out of the headlines. Let's work together to protect what you've built.